my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A higher but still indecisive spinning top yesterday. I can understand the reason why, as well. The move higher was the obvious follow-on to the previous session's very significant key reversal up that had broken up through the neckline of the January to February reverse head and shoulders continuation neckline, currently at 121.13, and the 2021 downtrend currently at 21.04. The halt at the top of the market was the cap provided by the old March 2018 low at 121.52, and we settled back down after failing to penetrate this cap just over the broken neckline and uptrend. Further below we have the seemingly solid looking flatlining medium moving average currently at 120.54, and further above we have the April 2018 low at 122.12. So far today, a gentle probing lower below both the neckline and the downtrend. More in disappointment, I suppose, at not being able to break the cap at 121.52 than anything else, I suspect, including a fresh bearish incentive of any form. Cable, aka sterling against the US dollar. A higher but still indecisive doji cross yesterday as the gentle cautious approach higher in recent days towards the significant overhead resistance at 139.99 saw the market have doubts and pull back down to a state of indecision. Please note, this is not entirely unexpected. As I pointed out yesterday, this 139.99 level has rebuffed 4 earlier attempts higher since late February, and even that attempt higher back in late February was turned around after a week. So it's important to pay close attention to it and to resistance levels beyond at 140.75, 141.43 and the March 2018 high of 142.43. The double bottom formed since mid-March is still there. It is this that has allowed the fresh attempt higher in the first place. Interestingly, a preliminary target X for the double bottom is in the 142.45 area, the same areas as the March 2018 and February 2020 highs, whilst the full target X1 is in the 143.30 area. Overall, we're still well within the June to September 2020 bullish shift pitchfork, with the lower time below currently at 137.47 and the middle time above currently 142.06. Please remember, this pitchfork has given the bullish angle of attack of this market since September of last year. Now, one final point. The lower time continues to be partnered with the rising medium moving average, currently 137.66, which has previously been also an effective barrier. So far today, a further pullback lower, more in disappointment in not having the courage to test 139.99 level, I suspect, than in some fresh bullish incentive. We now have the short medium moving average below, which is currently at 138.76. Euro sterling. Possible hanging man pattern yesterday, though it is a tenuous one and not the main events of the day yesterday or today. There seems to be two things happening today, one for certain and one possibly. Let's deal with the possible one first. The market dipped down yesterday and promptly moved back up from the April uptrend currently at 86.89, that along with a flat overhead trend line at 87.19 together make up a possible ascending triangle pattern. Now, the thing that is going to happen for sure, the uptrend is supported just below by the April 2020 low at 86.69. This 86.69 level is also crucial for a possible monthly key reversal up. If prices close tonight over the key 86.69 level, then we will have a monthly key reversal up. If not, then we will have a lesser outside month pattern. As a final point, please once again be aware that we have the spectre dropping from above the medium moving average currently at 87.56. So far today, well, today's the day for a monthly key reversal up, and once again we're seeing agitation and indecision, with the market currently on for a monthly key reversal up, as I've mentioned, but only just. and also testing and retesting the April uptrend. US dollar against the Indian rupee. A third bearish black crow yesterday, and a significant move down and closed below the 50% Fibonacci line of the February to April 2020 move at 74.26. This adds further weight to the ideas of a potential double top pattern and also target X for the recent ascending triangle pattern in the 73.85 area. We also now have an initial potential target X1 for the double top below in the 73.45 area, with a full potential target X2 in the 73 even area. So far today, not much. The market has a Friday feeling about it, holding steady at yesterday's low in the 73.95 area and looking like an indecisive spinning top right now. US dollar against the Brazilian real. An indecisive doji cross yesterday, a day after making a big move lower below the overhead combination of the recent 50% Fibonacci line at 544.41, the medium moving average currently 545.39, and the long moving average currently 544.53. The reason why prices have ended so low was the same as last week, the move down below the recent sideways triangle. We've already reached the initial target X for this pattern in the 541.15 area. We currently seem reluctant to move any further down. The market has hung around the lesser 38.2% Fibonacci line of the recent move at 534.15 and the bottom of the congestion from back in February this year. Below we now have the full target X1 for the sideways triangle in the 513.80 area, though I think that may be too much of an ask. In between we have Fibonacci congestion supports at 525.67 and 520.31. US dollar against the Mexican peso. An interesting and complex day yesterday. It was an immediate countering bullish double and bullish harami, if only just on the latter, after the previous session's bearish dark cloud cover pattern. Additionally, it may also be day 3 in a 3-day bullish stick sandwich pattern. This adds further weight to the idea I had recently put forward of a small double bottom formed over the last 3 weeks. The only issue is that just overhead we have the neckline currently at 13.5 of one of the 2 head and shoulders top patterns that have been formed over this year, and just above that is the flatlining medium moving average currently 20.96. To recap very briefly about these 2 possible head and shoulders top patterns, one from mid-January to late March and the other from late February to early April. First case we have initial target X3 in the 1971.70 area with a full target X4 down in the 19 even area. In the second case we have an initial target X1 in the 19.5 area with a full target X2 down in the 1885.5 area. These came into doubt recently because of the breaking of the March downtrend that I've since removed, but are still there despite some severe pressure to the contrary. In the background there is still the possibility of a larger double bottom pattern formed since November of last year. Yesterday's action neither assists nor denies this possibility. So far today, a seeming supportive picture of the action being held up on yesterday's close and the idea of a 3-day bullish stick sandwich pattern, and also the interesting short moving average currently at 1999.21. However, it is also a cautious one, as there is no real attempt to test the overhead neckline as yet, or the medium moving average above that. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.